Good day all. Ira Epstein of Linn Associates with your agriculture update, and we are now on the end of the trading day on Thursday, the 11th of July, 2019, just after 4:30 p.m. Central Daylight Time. As you can see, a strong close in the grain markets as the traders now feel that with the report that we just saw today of giving an idea of yields, giving how much the ending supplies and the new supplies will be, that if anything, the government numbers are going to fall from this point because of poor weather, because of rain, flooding, and so on. At least that seems to be what I am hearing throughout this building, and I'm in the Chicago Board of Trade, and that seems to be the census of what traders are talking about. In terms of other parts, you'll notice the dollar was slightly lower, but the stock market and some indices made record highs. And what's going on there is the Fed has decided, at least from the two-day testimony of Fed Chair Powell, that what the Fed appears to be on is a course to keep inflation going, keep the economy growth going, not at all costs, but by changing monetary policy. The Fed does not know what full employment means. This is their own words. The question is to whether or not what they have to do to make the Phillips curve work with getting wage inflation. Haven't figured that part out either. So there are things that change in economies, and we're at that point. When we look at soybeans, we can see how the market fell back recently towards the 18-week moving average of closes in red, and the market has been coming up. Especially it closed this week over 902, and it's only 6 cents away from here, 902 and 3/4. Let's call it 7 cents in an area. That'll get traders, I think, fairly excited, and they'll be looking back at the lows of last week on a closing basis of 872 1/4, and probably saying to themselves, just a guess, that might have been the reaction low. Close back under that number, and I'll change my tune, but I don't see that coming just yet. What I see is a market, and I've mentioned that before, that had filled a gap here, and I still question if this third gap's going to be filled. I'm looking to see now, can the market pick up from here? I admit the trend based on swing line is down. Lower highs, lower lows. I then look to see where the market's gone, and if you'll recall, when the market was down here and had that reversal day, we had pointed at two potential resistance points, one being the 100-day average of closes in green, the other the 18. Yesterday you went to the 100-day average. Today you're challenging the 18. We'll see if the market and what it can do there. It has not yet turned bullish. I am just telling you what I saw on the weekly chart. Now on the daily chart, it has not yet turned the corner. We did see the market 3 days ago got down to the lower Bollinger Band area, found its footing, and spun up from there. We also see that momentum is turning. So what we have here still is a market in a downtrend. The bias is still down. The market is corrected an oversold condition. Can it build on that to get anything more bullish? That remains the question. It's not there yet. In soy meal, you've negated the downtrend. So this is a different looking chart. You have a lower low and a higher high. Yesterday, if you'll take a look, you challenged the 100-day average of closes. The momentum in the market lost the embedded reading yesterday. This is what an embedded reading looks like. The word embedded means it locks in a certain type of trend. When it's under 20 and you're going sideways with both numbers that make up that oscillator, I say it's locked into the bear side. Over 80 to the bull side. It takes several days to do that. If you lose the red number, it's a warning sign that price and the 18-day average are probably getting ready to make a run at each other. The only time you can regain the embedded reading immediately is the day after it's lost. It would have had to have been today, and it certainly didn't do that. So now I'm looking for price and the 18-day average to make their run at each other, and the question is, can the market build any further on that? When you go to the soybean oil market, this market can be a surprise to traders. Should this market be able to clear this 28.41 level, you could end up with a pattern of higher lows, higher highs over the 18-day average, momentum turning up, and putting into play the possibility of getting to the 28.83 to 87 level, the combination of the 100-day average of closes and the upper Bollinger Band. The bears have to defend, as I see it, their position right here and literally right now at this 28.30 level. It closed 28.29. The market gets over 28.41, and especially if it closes over 28.30, I still think the upper zone could come into play. That's pretty formidable resistance. Keep that in the back of your mind at that upside. In the corn market, you turn bullish today all at one time. You have higher lows with an outside day up. Higher highs, you did take this 448 out, you got the 48.5 today. The market closed over 447.25. So what I think took place today is the bulls grabbed control of the market until today's lows are taken out of 430.25. You closed today at 448, so that's quite a range it had. And you can see the market came alive because as traders look to see what the government reports came out to be, they're anticipating, I don't know if they're right or wrong, but we had a long discussion in the office as to what I thought versus others. We know that we lost planted acres already. Anything around rivers and so on in many parts of the country are lost. But I'm arguing that we're going to know more come the August survey that the government just did about prevent plant acres that went in, because that survey came in so late. Why couldn't farmers have told the government at that point on these surveys, hey, I decided to go into prevent planting? So I think you're going to get a better idea at that point, and I think traders came around to that way of thinking late in the day. In the wheat market, you negated the downtrend now. You're correcting an oversold condition. You have a lower low, higher high. Out of the downtrend, first resistance, the 18-day average of closes. In the sugar market, the market held the resistance zone. If you look at 1255, that's the 18-day average of closes. This number here is 1265. You got to 1262 today. The bears are still in control of this move. The market admittedly is in oversold territory, so I'm not convinced that there's a big downside because you're already oversold. If the market falls from here, support 1221, resistance still the 18-day average of closes. In coffee, magically the market drops down, goes right to that 18-day average, stops. Remember what we talk about here. So often you go to that number and the market tries to figure out what to do. Now it did not take out this 10. What is that number here exactly? That number is 105.30 level. If the market clears 109.25, the bulls take control again, as long as you don't take that number out. If you take out 108.30, especially if you close under 105.55, the bears grab control of the market. You're a real interesting part. Nobody has control right here. While the swing line's down, the bias is up and momentum is pointing down. In the cocoa market, again, you went to the 18-day average, and that's where the market tried to hold. Again, that line in the sand. The trend remains, in my opinion, to the upside. Higher lows, higher highs, a settlement over the 18-day average. What's lacking here is momentum is pointing a bit downward, while bias and the other parts of the market are holding up. In the cotton market, there was nothing that I saw in that report that came out today that was one way or the other friendly on cotton. You still have the lower highs, lower lows. Now, how many days are we under the Bollinger Band? Today you closed 63.08 under it. Yesterday's settlement was 63.82 under the lower Bollinger Band, and the day before under it. So the odds of the market tomorrow closing under the Bollinger Band, 5% of the time you close above or under. I would give each successive day under or over, I subtract one of those 5 percentage points. So I give the market a 2% chance tomorrow of closing under that band. That is not that I'm bullish. Remember what I said, this sideways action and breaking out when this first happened, it is common you get oversold and a little overdone. But the bears have control of this market, and the question is, can they get embedded readings down the road, or do you correct and go back first to the 18-day average of closes? I see nothing bullish on that market. In the cattle market, I've switched gears now to the October contract. We're already at July 11th. Why not move on? Higher lows, higher highs. This is called the opposite of cotton, running running the upper Bollinger Band. You get over it, you pull back, you hit it. It's a bullish configuration in an overbought market where both numbers in the slow stochastic today did get over the 80 level. So that's the first day of trying to embed. They weren't there yesterday. So you're just overbought, but trying to come out of this sideways configuration with a bullish bias. If it runs to the upside, the 112.20 area, the 100-day moving average of closes could be a resistance. I've moved on in the feeders. I'm no longer watching the August, I'm watching the Septembers now. Higher lows, higher highs, running the Bollinger Band. Now here we have a bit more of the embedded reading taking place. Both numbers today over the 80 level, both over yesterday, that level, not the day before. So now the question is, can the market embed on a bit of even a pullback in the market? And that would be a bullish sign at this point in time. In the hog market, I'm now watching the October hogs. You can see how the market's just hanging here at the 18-day moving average of closes. I'm going to repeat it, that line in the sand, because that's where markets decide what to do. Should this market clear 74.27.5, that's the high of yesterday, what would happen is, unless you took out this low first, which I would doubt that would occur to do it all in one day, if that happened, you could argue that you're going to get higher lows, higher highs over the 18-day average, momentum already pointing up. As a bear, you're looking to say, okay, the bears are defending their short position here. That's the number they don't want to take out. And should this market get any more bearish information, maybe it goes down after this correction in stochastics to the lower Bollinger Band. Interesting time in those markets. I talk about all this every single morning for my traders. Now, I wake up at about 5 in the morning. I'm an early bird, and I've already read what's going on in Asia, Europe, and I start recording typically before 6 a.m. Central Daylight Time, a video. Where in that, the idea is to show you what I'm seeing exactly on charts with more information than you're getting here. The idea there is, because it's a user ID and a password, what I'm able to do in that particular video is say, buy here, sell there, do this, do that. I'm going to give you the technical analysis. I already know the morning fundamentals, so if there's something there, I'm going to talk about it. And I will talk profit points, exit points, stop loss points, stops to lock in possible move you've got. It goes all over the board. I cover the markets in this exact sequence each morning, and you're able to pull on the recorder on the bottom and go from section to section that you'd want, or there's a lexicon on the side where you can jump around. How do you get access to this? Well, it's pretty simple. For the first 30 days, it's $7.95. Works out to 26.5 cents a day. After that, you don't want it, you drop out. You can drop out actually at any time. After the first 30 days, it's $15 for 30 days, and a lot of people want to buy a one-year subscription. We sell those at $13 a month, $156 for the year up front. So anywhere you want to go, why don't you go look at it at www.iraepstein.com. It's on our website under education or research. You can click here to get there as well. I'm Ira Epstein. You have a good day.